Good morning everybody and welcome to this European session webinar on Monday the 9th of September. Hopefully you are ready for another incredible week in trading the financial markets. Really good week last week actually. We had to navigate a lot of high impact news announcements. Risk management, portfolio management was a key requirement last week, but we ended up pretty well even with the volatility that happened on Friday, which we'll get an update on in a moment. So hopefully you're ready and focused for another incredible week in trading the financial markets. Of course, I will try to keep up to date with all the latest economic news announcements and biggest market movers, and also highlight the different trading opportunities from the London and Sydney trading floors inside of smart charts and make this another fantastic week ahead. So first of all, let's get a quick of an update of what actually happened at the end of last week, because we know one of the biggest themes over the past month or so, really 2 months, has really been the US dollar and the weakness that we've had in the US dollar, with the euro US dollar, pound US dollar, Aussie US dollar, Kiwi US dollar, gold US dollar all rallying higher, dollar Swiss, dollar CAD, dollar yen all pushing lower. That's where the biggest market theme has been, because everyone's been positioning themselves for the widely expected interest rate cut from the Federal Reserve later on this month. However, last week we had a huge reversal in the price action of the US dollar on a big surprise on the US employment reports, the non-farm payroll reports. And this report shows the change in the number of people employed during the previous month, excluding the farming industry. And job creation is an important leading indicator of consumer spending, which accounts for the majority of overall economic activity. The forecast was for 176,000 jobs that have been added to the economy last month, but only 114,000 jobs was actually added to the economy last month. So that was much lower than expected, and it caused a huge reversal in the US dollar. So it's going to be a theme to keep an eye out on now, actually, as everyone has been positioning themselves for this interest rate cut. Now the economic data is showing something a little bit different, that the economy could be struggling. So now a lot of short players have bailed on their positions, so we will probably be now looking for some reversals or maybe some sideways price action, because we haven't had any sideways price action ranges in the dollar pairs for a while, because there have been in such strong trends. Sometimes a downtrend could just reverse into an uptrend, but sometimes it can just go a bit range based and everyone just takes a bit of a breather, because everyone's made a lot of money shorting the US dollar. It's been the biggest theme over the past several months. In fact, a lot of the trades that we've been taking, the most successful trades, have been on the US dollar. Even in last week, right, we closed the euro dollar long position on the phase changer, the US dollar short position on the market breakout strategy in profit. So something we're going to be mindful of. Of course, any trading opportunities around where the market is right now in the US dollar, I would try my best to highlight them for you through these webinars, but make sure you are tuning in to all the live daily trading webinars as well, so you too can highlight them, interact with them, participate in them with the live traders on the desk. Now for the week ahead, so Monday and Friday, a bit of a quiet day from the economic calendar perspective, but throughout the week, very high impact news announcements coming out. First of all, Tuesday, with the UK claimant count change report. And basically this report here shows the change in the number of people claiming unemployment related benefits. And whilst it's a lagging indicator compared to the actual employment situation, the unemployment rate, it's an important signal of overall economic health, okay, because obviously it's related to consumer spending, which accounts for the majority of overall economic activity in a country, and of course it helps to set interest rate policy. Now, last month the forecast was for 14,500 UK claimants. The actual report was a whopping 135,000 new people claiming unemployment related benefits. So a really big change. Caused a lot of volatility in the British pound. This month the forecast is for 95.5 thousand, so it's going to be something to keep an eye on. In fact, in the early part of the week is a big week for the British pound, because we had the UK claimant count change report on Tuesday. On Wednesday we also have the UK GDP announcement, and GDP stands for gross domestic product, and basically it's just a measure of a country's overall income and the amount it produces in the economy. In July, GDP in the UK was 0.4%. It fell to 0.0% in August. Now the forecast is for a bit of an increase to 0.2%. So again, it will be interesting to see how the pound will fare to these. Now remember, we do not try to predict what's going to happen on news announcements. We don't try to compete with the algorithmic traders taking trades in nanoseconds, readjusting institutional portfolios on these news announcements. What we look for are surprises, and then we look to trade that follow through. Because most things are already priced in, right? We know this from our day one learn Forex work, that everything's already priced in because institutional speculators build positions ahead of time. That's why they hire thousands of analysts all across the globe, so they have time to build positions because their capital size is so large. They can't be market timers like we can. So everything's already priced in. The key is when you get a big surprise, and now everyone's got to readjust their portfolios, and it's that follow through that we're going to be most interested in if it is there. So something to keep an eye on the pound pairs. Also on Wednesday with the US inflation report, and the year-on-year figure for July was 3%. That fell to 2.9% in August, and the market is expecting another fall to 2.6% in September. And this will just highlight really the interest rate cut from the Federal Reserve as inflation is coming lower, so they can cut interest rates. Again, if there's any big surprises, this is going to be what we're going to be most focused on. And on Thursday, the European Central Bank refinancing rate and press conference, and this is basically their interest rate decision, and it's widely expected that the central bank will cut interest rates from 4.25% to 3.65%. All right. Now, the market hasn't really focused on the euro because the focus has been on the US dollar. So maybe this week we might even see a bit of weakness in the euro as people start to adjust their positions in accordance to lower interest rates. But really what we're looking for is not necessarily surprise. I mean, it's very rare that ECB will surprise the market, but they might. What we're looking for is in the press conference, what are they saying? What are they saying about the economic situation in the Eurozone? What is the future direction of interest rate cuts? Are they going to do more later on in the year? So the press conference is the most important, where we get some of the biggest moves, because that's where they give their insight into what could happen in the future. So it's going to be a pretty volatile week, which is fantastic if we're exercising proper risk management and just waiting patiently for what the market tells us to do. So it could be another fantastic week in the markets, and I'll be here to update you on all the latest market developments, potential trading opportunities. But obviously make sure you're turning up, doing your work, and using the team, right? You know, there's a whole team of traders inside of Smart Charts there to support you guys in your live trading as well. All right, let's have a look at the market and see what's going on there. Okay, so here we are on the volatility reversal strategy on the daily chart, and this has been an opportunity that's been highlighted through the Smart Charts trading floor, which is quite interesting because first of all, we have, of course, what Smart Charts is finding for us, the double bottom pattern, and this is what we talked about with the US dollar. You know, the US dollar has been a pretty decent trend to the downside, but we are seeing some exhaustion patterns here at the bottom. Okay, and we've come into this very long-term price level here. In fact, look at where we're trading right now. Very interesting. This is where it started at the beginning of the year, January. We've had a big move throughout the year. It's come all the way back down to where it's basically started at the beginning of the year, right? So not only do we have that double bottom pattern, we're coming into this multi-year low point, and we can already see sellers have struggled to break through this point here before. And we're just really in this very long-term trading range that has actually developed. And because buyers have turned up here before and we are starting to see sellers are struggling to break lower, we'll be looking to see if we're going to get that reversal in the US dollar, which actually did start last Friday. Okay. Now, not only does Smart Charts help you to highlight potential trading opportunities, but it also helps you to do the most important work, which is really risk management and portfolio management. Because if we click this buy icon here, it will populate an entry price of the blue dot, stop loss of the red dot, target the green dot. And if you're not too familiar with your individual trading rules, then of course make sure you're looking at the e-learning portal section of Smart Charts, or speaking to your coach, or attending the courses, the workshops, the boot camps, all that kind of stuff, to make sure you know exactly how each strategy works and what you're looking to do with each one of those. But most importantly, these can all be adjusted according to your own user preferences, of course, and it will do the risk management work as well and do the risk management calculations instantly, which is really important because we need to keep the risk low. Make sure you're able to manage the random distributions or wins and losses that develop throughout the day, throughout the week, throughout the month, because this is a game of probabilities, all right? And we also like to set an expiry as well. So for me, I like to set a current bar close expiry on this particular strategy. So look, if momentum doesn't pick up, if buys don't turn up by the end of the day, that's fine. Pending trade expires, didn't win, didn't lose, didn't cost us anything. If they do decide to turn up, trigger into a live open trade, either goes to your target level or it goes to your stop loss level, right? And also something else that's been highlighted in the smart charts trading floor was actually New Zealand against the US dollar on the power pivot strategy. Something that actually we have been tracking for a while because we've had a couple of things that have been going on here. So first of all, we came into this very long-term price level. I'm just going to shift this here. So this was like a multi-year high point, okay? And as price came into this level, we've been looking for the reversal, okay? And what we had was huge divergences, okay, between price going up and the MACD pushing lower, showing signs of lacking momentum, right? So momentum as it's going up is actually weakening, actually due for a reversal. So we have been looking for reversal for quite some time here. Now we've got a couple of things developing. The most obvious thing is we're below this level. So this level here, price did actually break through it and actually did bounce off of it, but it didn't last very long. We're now back below it. And if we stay below this, this could open up the doorway to some potential weakness. So we have a change in market structure here as well, on top of indicators showing momentum waning and also reversing here as well. But we've got the key change in market structure. We can also see that on the way up, price stayed above the moving averages on the charts, and now we're below the moving averages. So it'll be interesting to see if we're going to get some resistance on these moving averages on the way down. So that will be obviously quite interesting. So just like here, we have some nice bounces on the moving average on the way up. Then on the way down, we have some nice bounces on the moving averages on the way down and on the way down here. So, you know, we'll be looking for a similar kind of situation to develop. Now, also, that's from the bigger picture structure, the bigger cycles on the chart, like if you're looking at the daily, the super cycles. But actually, if we go down to the smaller cycles here, we can also see that price is starting to stall, right? We've broken through this area here and this wedge formation that has also developed. So if we can stay outside of this, then it does open up a doorway to some potential downside, all right? So we've got a change in market structure here, broken through some key levels. It'll be interesting to see if we do get some further weakness developing in this currency pair. Now, in this instance, the power pivot strategy, the higher reward risk strategy, okay, 3-to-1 reward risk strategy. So we use it as more of a positional style of trading strategy as well as momentum, all right? So in this instance, you may have a lower success rate trading a strategy like this if you're trading a positional setups, i.e. trading market conditions before they've actually started, that anticipation of a market condition. Of course, if you just learn Forex, then you wouldn't do that. You would wait for market conditions to actually be developed and confirmed and trade those, high probability. But if you're a master trader, then yes, you might use more positional strategies, adjust your reward to risk ratios, and also lower your risk as well, because you're making more per trade when they do win, but you will have a lower success rate because you're trading a market condition that hasn't started yet, but the anticipation of a market condition. That's where you can get the high reward to risk, but of course it's a lower success rate. So if you're doing positional strategies, obviously the risk management is a little bit different there. But Smart Charts not only helps us to identify the potential trading opportunity, but also do that risk management work very easily. Because by clicking the sell icon, populate an entry price at the blue dot, stop loss at the red dot, target at the green dots. And these can all be adjusted according to your own user preferences, of course. We do the risk management calculations, and if you're doing positional styles trading strategy, we tend to lower the risk here to account for the lower success rate. But we get the higher reward to risk, so it all balances out really. And it will automatically recalculate your stake per pip. And we like to set an expiry, and on this particular strategy we tend to set a current bar close expiry as well. So, you know, if sellers don't turn up, and continue to move. If pending trade expires, didn't win, didn't lose, didn't cost you anything. Now look, there's plenty of other opportunities developing in the financial markets. So make sure you're turning up, following your trading plans and following your routines, or leaning on the team to support you from the different traders, from the live trading webinars and boot camps. So make sure you're doing everything you can to really be prepared to capitalize on all the opportunities developing throughout the financial markets this week. That's it from me. All the best for your trading today. See you next time.